This module covered the pillars of measuring economic activity, like GDP, its different calculation approaches, and its link with the overall economic growth. Initially, a closed economy was considered and GDP was defined as Gross Domestic Product, GDP, is the market value, the value that the buyers are willing to pay, true value, of all final, the end product, and not the product that is in intermediary, WIP, stage, goods and services produced within a country, created within the country, in a given period of time, normally 1 year. The expenditure approach to computing GDP for a real-world economy. The income approach to computing GDP for a real-world economy. Value-added approach to compute GDP using the value-added approach. Find the sum of the values added at all the stages of production. This approach calculates value added at each stage of production cycle. As you may be aware, the total value added is equal to total GDP. Then, what GDP omits was discussed. Non-market goods and services. A good or service that is actually not bought and sold for a price in the market. Example, services of a wife in cleaning up of the house, for which there is no monetary transaction. Underground activities, both legal and illegal, such as illegal transactions, such as drugs peddling, would not be recorded as the government has no way of tracking it and no record exists of the transaction. Transactions done with the objective of tax evasion. Example, cash transactions in property. Sales of used goods. Example, a used car sale, for example, does not enter into the current year statistics because the car was counted when it was originally produced. GDP only measures current production, that is, occurring during the current year. Government transfer payments. A transfer payment is a payment to a person that is not made in return for goods and services currently supplied. Then, the classic dynamics of household and firm were discussed. So, from economic standpoint, households are people like furniture expert and entrepreneur who are in a job or working as an entrepreneur. They are also owners of factors of production, that is, land, labor, capital, entrepreneurial ability, which they give to firms to produce goods and services in an economy. Firms sell products and service to consumers and buy factors of production from the households. Households sell all of these either directly or indirectly through other intermediary firms. The inner flow is the movement of products and services, factors of production between firms and households, and the outer flow is the flow of money between firms and households. Then, the other entities such as government, rest of the world were added to give a combined view of GDP. Under the combined view, flow of goods and services. Then, it was briefly discussed how market performance is assessed through GDP measures. Two approaches were discussed. First one is economic growth. Annual economic growth has occurred if real GDP in 1 year is higher than real GDP in the previous year. The growth rate is computed using the following formula. Percentage change in real GDP is equal to real GDP later year minus real GDP earlier year divided by real GDP earlier year whole multiplied by 100. And the second one is the business cycle to assess the ups and downs in the economy.